Welcome to the Daily Update Podcast, where I'll go over the action in the market for Monday, December 1st, and we'll see how things look for Tuesday, December 2nd. The S&P 500 closed down 0.53% on Monday, essentially erasing Friday's post-Thanksgiving gain and finishing the session just above the S2 pivot point near 68.15. Volume remained below average. Conviction was low, and the price action was a classic whipsaw of up and down action. There was a lower open by an overnight Bitcoin drop, a brief poke above the daily pivot at 68.40, then a slow grind lower into the close. The S&P was unable to trade positive at any point during the day. Structurally, the S&P is bullish on all three time frames, but lacking a trend. Also lacking is growth leadership, and therefore still warranting market-neutral and hedged positions until proven otherwise. Looking at growth versus value, growth continues to underperform value, a pattern that has been in place for quite some time. Strong bull markets require growth in the driver's seat. Right now, it is not. Discretionary to staples and most risk-on ratios are flat to declining, but still holding relatively firm. Both small and mid-cap indexes retraced some of last week's sharp gains and are at the top of multi-month ranges. We've seen several breakouts in 2025 and even in 2023 and 2024, so another false breakout cannot be ruled out. There's still a confirmed Hindenburg omen in the background and needs to be respected. Price is still one strong advance away from an official ZWAG NYSE breadth thrust that must be triggered by December 5th. Even without an official trigger, the McClellan oscillator's swing from minus 55 to plus 68 in a single week has produced excellent forward-looking returns historically. Breadth is improving, and that is constructive. Daily sentiment still remains pessimistic and is below the 25 level, currently residing at 24. In these instances, it can be often used as a contrarian indicator. Looking at the rates and intermarket action, the 10-year yield rose to approximately 4.1%. This is not problematic, but worth monitoring ahead of this week's economic data. Bitcoin fell below 90,000 overnight and now is trading in the mid-86,000s. Its correlation with the Nasdaq 100 continues to weaken, but still exists. As far as the economic calendar this week, on Tuesday there will be the JOLTS job openings. Wednesday, we'll get the ADP employment change as well as ISM services. Thursday, we'll see initial and continuing claims. And Friday will be the all-important core PCE report. Seasonality for December 2nd has a mild negative bias, but December as a whole has been higher 73 to 74% of the time, going back to 1950 with an average gain of 1.4%. In conclusion, the S&P 500 remains positive across all time frames. Momentum indicators are holding up for now, breadth is supportive, and sentiment is extreme negative, which could be positive. However, until growth reasserts leadership, the prudent posture is to remain market neutral with strategies and always be hedged. What we'll be watching for in Tuesday's session is either a confirmed breadth thrust and growth rotation higher, which could shift the market more aggressively bullish, or B, a failure at resistance and renewed value defensive leadership, which would increase downside risk, potentially heading into the end of the year. Thank you very much, and I will talk to you in the next podcast.